2020 has been a disaster of a year, but if you played it smart, you could have been really successful with investing. And this happens very rarely, and when it does, you want to be very greedy. You can't learn everything about everything. I'm sorry, but you just can't. These tips have helped me be really successful over the last decade with investing. I think you guys will find a lot of value out of them and learn something, so make sure you stick around to the end. What's up, guys? It's Mrs. Invest. 2020 is coming to a close, thank God, and we're also rounding the corner on the last decade. And I was thinking, if I could give you 10 tips for investing to be successful, what have I learned over the last decade that I think can help you guys? I know they've helped me, so stick around to the end, like the video and subscribe if you're new, and let's get right into it. Number 1. With investing, there is always a soup of the day or a catch of the day. Ask what it is, but never order it. Sorry, I just had a cough. Number 2, growing your wealth over the long term doesn't happen by accident, and it's not a miracle. You need one of 3 things: leverage, growth, or the ability to make deals. Leverage, the perfect example of that is real estate investing. You take a relatively small down payment and you use that down payment to control a much larger asset, the investment property. Growth, buy and hold amazing growth stocks. Number 3, if it's related to your business, get really good at making deals. Number 3, when you first get started with investing as a beginner, copy the most successful investor. That way, when you are clueless and have no idea what you're doing, you at least have a framework to work off of. Only buy stock in companies that have solid earnings, strong fundamentals, and good potential for future growth. If at first you have a hard time identifying those factors in a company, then just buy an ETF. Number 4, ASMR. Finding the investment strategy that works best for you does not necessarily equal finding the best investment strategy. Figure out what that second one is and work towards it slowly over time. If you have high knowledge in a particular sector, your chances of investing successfully in that sector are higher than the average person's. But you can't know everything about everything. I'm sorry, but you just can't. Pick a few and learn them. Number 6, also known as my favorite one. Every once in a blue moon, the market gives away free money. Get better at identifying these moments in time, because when you identify them, you can capitalize on them. And when they do happen, be very greedy. Gather all your pennies and invest. A great example of this was this past March. I saw prices on certain stocks that I never thought I would see again in my lifetime. And this comes back to the previous tip as well. If you know a couple sectors really well, you can identify when really good deals happen. One of my favorite dividend paying stocks here in Canada, Royal Bank RY, dropped down to $78 a share from a high of $110. I truly never thought I would see Royal Bank in the 70s again in my lifetime. And this comes down to also the previous point of knowing specific sectors really well. I knew that Royal Bank is a great company with good earnings, good growth, and it will recover once all of this craziness goes away. So you bet I was loading up on shares of RY. Actually, I have a really useful tool that I use to gather the shares. I'll just show you here 1 second. Do you see this broom? Yeah, that was me just sweeping them all up at the end of March, and I gathered them into this dustpan here and then just deposited them into my account. Highly recommend this tool. It's really, really useful for market crashes. Number 7, buying good companies when the market takes one bad piece of news and extrapolates it to doom and gloom through the future for that company is usually a good investment strategy. This one bad piece of news could be like a bad earnings report, or maybe the CEO is tweeting something crazy about the stock, and the market takes that and temporarily destroys the stock excessively for no reason. That is a really good time to buy those types of companies that which you know will recover in good time. Number 8, if you want to pay less tax, and who doesn't want to pay less taxes, buy and hold amazing growth stocks. If you want the stocks to increase in value, they need time to grow. Number 9, have multiple sources of income. You need cash flow to invest, and often the best investing opportunities in our lifetime is when cash flow is tight for most people. Maybe the economy goes sour, people lose their jobs. So by having multiple sources of income, you increase your chances of having cash flow to invest during really good market opportunities. And number 10, Avoid big losses. Say it one more time. Avoid big losses. A big loss can ruin your entire year. And you want to differentiate between big losses due to your own poor investment decisions versus big losses due to generally bad market conditions. When it's a big loss due to your own poor investment decision, maybe you bought a penny stock hoping it was going to go to the moon and it went to zero. Take the lesson from that and don't do it again. And differentiate that between a big loss due to an overly bad market condition like we saw in 2020. If the markets are just generally bad, hold through and the stock will probably recover. Thanks for watching. I hope you guys got some value out of these 10 tips that I've learned over the last decade and that have been especially reinforced in 2020. Like the video and subscribe if you're new, and I will see you guys in the next one. Bye.